Is it? Good.
Good morning. Welcome to Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me live at HQ is Jim Schmidt. He's a Senior VP of Investments over at Raymond James and Registered Investment Advisors. This one is for you. Thank you very much for joining us in New York.
Great. Nice to be here.
Yes. Philadelphia, New York. We're taking the show national.
Go to Boston next.
So let's talk about the interest rate environment. We potentially could have a hike coming in December. Is it still hard finding high yield and relatively safer investments in this market?
It's still difficult. Getting better on the short end. We've been beginning to build some short-term ladders in certificates of deposit, believe it or not.
Oh, really?
3 to 5 years is about a little bit more than 2%. Nothing to live on, but enough to kind of start to build a strategy. Haven't built a ladder in so long. It's fun to get back to look at that.
So what do you mean by building a ladder?
Sure, you take a certain amount of money, divide it maybe by 3, and buy 1 year, 2 year, and 3 year paper with it.
Right. Well, it's interesting because you hear, in the equity markets, the market's up 30-35% on the year, but not everyone, depending on their investment profile or where they are in life, what their goals are looking to necessarily attain that.
Right. And what's happened too is that it's very difficult for folks to keep their risk tolerance in place and to be able to understand the risk that the riskiest point in their investment careers or investment lives where they really felt scared. A lot of complacency, a lot of happier folks out there, and difficult for them to come back to where they were.
Right, and with the market at all-time highs, all the major averages are just hovering right around there. Is the market overbought at this point? And as an RIA, how do you manage that with your clients? Because expectations are quite high. Sure.
Well, just recently, just in the last few days, we opened a new account, but we installed one of our models, but we only did it half full. We only did it halfway. So we kept half in cash, but put the other half into the model, and that's one way that we make it make a clear point to clients that we're not at the beginning of a bull market. Now, are we at the end of one? I don't know, but we're certainly not at the beginning of one.
Well, it's really interesting because I think the driving factor for at least the past 12 to 18 months has been momentum, right? And that goes back to what you were saying. And let's wrap it up with this. If you mentioned before that investors need to refocus their investment profile from time to time, which is a practice that you should do, right?
Right.
And if it has changed now, why would it change? How do you right that ship in an environment like this?
You try to go back and reflect on how the original risk profile was built. The circumstances and conditions that were around at that time that enabled people to really get a clear vision as to what their risk tolerance was. This is not a market where people are going to really identify that without some conversation from an experienced financial advisor.
Right. Do you get that question a lot? Oh, we see the S&P up so much, the Nasdaq with all the tech stocks are up. But my portfolio isn't necessarily doing that. Well, there's a reason why, and what are some of those reasons, and how do you manage that when clients are looking on, whether it's CNBC or Fox Business, and it's a new high every day?
So what we do is we mollify, we reduce some of the risk by cash or fixed income positions, although we have investments that have either performed as the market or better than the market, but we kind of cushion it with so that we have a place to hide before we need to.
Right, and I would also imagine, depending on where you are in the investment cycle, where you are with your age profile and so forth, that there's a reason why you're not going to see 30-35% returns because you're taking on more risk that way.
Right, and it's very hard to manage the declines. It's very hard to get out. It's very easy in this business to get in. It's very difficult to get out, to figure that part.
Well, thank you very much for joining us in
Great,
New York.
Jill, thank you.
Traders and RIAs, as always, thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.